Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data-driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Welcome everybody. This is the Caribbean Business Review. I'm Joseph Cox. This week, as we go into our 7th program, we use the opportunity at our 6-week anniversary, so to speak, to do a little bit of layout refresh. So we have sought to provide you with even more information without it being obviously overwhelming. But indeed, as we look to this week's program, we have to comment that we are again entering the realm of uncertainty. As at the week's end, when one would have presumed that with the oil prices stabilizing over the week, in fact coming down, and persons like myself would have offered that perhaps they have been squandering the war premium a little prematurely. Sure enough, at the week's end, the U.S. president has now been suggesting that he's quite prepared to take military action against Iran again, and therefore that also creates an additional uncertainty in the marketplace. Similarly, the U.S.-Canada trade talks seem to have been halted, at least temporarily, one would hope, as there is again additional uncertainty surrounding tariffs being brought to bear. So all in all, we're looking at a really uncertain investment and business climate globally as we try to navigate all these issues. But coming up on the program this week, we're going to be speaking with as our special guest, Angela Rainford. And Angela Rainford is the CEO of Statistical Energy. Now, she has been a major investor in a regional energy space and also a player in the global financial markets. And it will prove to be a quite interesting conversation, I'm sure, as we navigate what is the Caribbean investment climate and whether or not we are really ready to truly avail ourselves of the offerings that are available, frankly, even in spite of all the uncertainties that we face. During our CBR briefing, I'll be looking at the issue of the normalization, frankly, the sad reality of the normalization of development planning breaches. So it is something that we have to address if we are going to be serious about moving forward in this region. That will be followed, those offerings will be followed by our Market Watch and our Global Pulse segments, as then we will come back and close out the program for today. So all in all, hopefully we have provided you with additional ammunition with which to make some business decisions this week. But the fact of life is that it's now time for us to begin the offering. So CBR will be back just after this.
In a world of constant change, insight is your greatest asset. At Joseph Cox & Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox & Associates. Insight, experience, impact.
In a decision that will reverberate across Jamaica's urban planning landscape and potentially influence legal reasoning throughout the Caribbean, the Jamaican Court of Appeal has delivered what can only be described as a stunning endorsement of post-facto compliance. By reversing the Supreme Court's earlier invalidation of environmental and building permits for a $190 million apartment complex at 17 Birdsucker Drive in Kingston, Jamaica, the court has effectively declared that statutory process is optional so long as the end justifies the means. WAMH Development Limited's project was already 99% complete and reportedly sold out before the judgment was handed down. In that context, the court's insistence on the legality of issuing permits after construction commenced doesn't just stretch credibility, it breaks it entirely. This ruling gives tacit permission to a new normal in Jamaica's planning regime: build first, ask later, and expect absolution. This isn't just a legal technicality, it's a profound failure of governance. The invocation of the 1966 Development Order as a governing framework over the more restrictive 2017 Provisional Order was a sleight of legal interpretation that conveniently ignored the development's real impact on density, community character, and restrictive governance. In a fast urbanizing capital city, relying on a planning document from nearly 60 years ago defies logic and undermines any claim to modern responsive urban policy. The court's narrow upholding of a stop notice, long ignored by both developer and regulator, is nothing more than theater. KSAMC's duty to enforce compliance rings hollow when the horses have already bolted and the stable is now luxury housing. What message does this send to communities? That their objections can be heard but not heeded? That the law can be broken so long as it is eventually complied with retroactively and on the developer's terms? The residents of Birdsucker Drive did everything by the book. They organized, petitioned, and pursued judicial review. The court acknowledged their standing but denied them substance. Their legitimate expectations of consultation were dismissed. Their concerns about overdevelopment were minimized, and their faith in the planning system has been rewarded with a slap in the face. What we are witnessing is regulatory capture by precedent. Agencies like NEPA and KSAMC appear more responsive to developer timelines than to their legal obligations or to the rights of communities. The result is a deep erosion of public trust in institutions that are supposed to guard the public interest. Even more concerning, the ruling sidestepped a crucial fact. The 1966 Development Order, while treated as controlling, is itself more restrictive than the 2017 draft when it comes to density and scale, yet those limitations were also breached. The court's refusal to acknowledge this contradiction points to a deliberate blind spot, one that enables selective compliance for well-resourced actors. This is not merely a technical victory for WAMH Development Limited. It's a broader victory for developers who can afford to gamble on retrospective legality. By blessing the practice of regularizing illegal construction via permit after the fact, the court has effectively enshrined a path to impunity. Importantly, while a Jamaican Court of Appeal ruling does not create a binding precedent outside of Jamaica, it can serve as a persuasive authority in other Caribbean common law jurisdictions. Courts across the region grappling with questions of regularity compliance and environmental oversight and citizens' rights may look to this ruling intentionally or otherwise as a template. This amplifies the stakes and underscores the urgent need to counteract its normalizing effect through legislative reform and policy leadership. The Birdsucker ruling also stands in stark contrast to the reasoning in Hopefield Corner Limited v. Fabric de Yunis in 2008, where the Jamaican Court of Appeal refused to modify restrictive covenants that protected the residential character of a neighborhood. In that case, the court emphasized the importance of procedural integrity and proper notice, the enduring value of covenants in preserving neighborhood expectations and aesthetic character, and the risk that a single breach could represent the thin end of the wedge. Hopefield applied what is known as the estate agent's test, considering the expectations of a typical prospective buyer. It recognized that even without tangible economic damage, the breach of planning norms could constitute material injury to a community. This reasoning could and should have guided the analysis in Birdsucker. The contrast between the two rulings highlight a dangerous judicial drift. Hopefield prioritized public interest and legal structure. Birdsucker has prioritized expedience and retrospective compliance. If Birdsucker becomes the new benchmark, Jamaica risks dismantling one of the few remaining legal tools that communities have to protect themselves from uncontrolled urban intensification. The Birdsucker ruling is a wake-up call. Without decisive legislative and policy reform, this case will be cited again and again to justify future breaches. We therefore need clear legal prohibitions against retroactive permitting, modernized planning instruments that reflect contemporary realities, mandatory enforceable consultation processes for impacted communities, and independent oversight to hold state agencies accountable. Urban planning is not simply about buildings, it's about people, place, and process. When those are disregarded, we don't just lose control of our cities, we lose the very democratic foundation on which planning is built. Jamaica cannot afford to let this become the norm, nor can the Caribbean. Welcome back, everybody. And this is a Caribbean Business Review. I'm Joseph Cox. And today we are speaking with Angela Rainford. And Angela is the founder of Statistical Energy, as well as, I'm sorry, Angela, I cannot pronounce the other one, so I was going to call it Rainmaker. Well, the thing is this, that as we continue, because you are somebody, you have what they call a really varied background. You're in business, then you delve into renewable energy investing. You have had a background with McKinsey. You have had a really, really varied background. And I mean, aside from the obvious question of when do you sleep?
I actually do sleep quite well, but yes, it's a fair point.
No, but the question is this. Let me be serious now, because you started what was probably the largest single solar plant, as far as my reading would have told me.
Correct.
In Jamaica. And I am very curious about, one, why would you have gone down that route, given your background, which is in business, frankly? Why
Right.
would you have gone down that route? And secondly, how do you assess the investment climate within the Caribbean vis-a-vis, for example, you're in London? How do you assess it? What makes this part of the world an attractive investment option from your perspective?
I think from my perspective, besides clearly being from the Caribbean, I think it's an overlooked opportunity. And normally the places which are overlooked, I find, tend to have better opportunities, right? Less competition, more niche market. So the Caribbean, when you mention the Caribbean to a number of investors, classic investors, it's not top of their list. There's the traditional markets, the US, Europe. They may start venturing out into what they classify as emerging markets. And obviously there's Asia as well, which is a massive market. But the Caribbean is a little bit the forgotten place when it comes to mainstream investing. And I think it's a shame, but for people who are willing to look in the forgotten places, I think that's where you can find some of the most interesting opportunities.
No, I hear you on that. But then what strikes me then is that if people are not really looking at the Caribbean as necessarily the top of the line investment option, that would suggest to me that funding rounds will be a little more challenging. There'll be a interest premium attached to it, etc., etc. How do you navigate that but still maintain that type of viability in terms of a new venture, much less something of that nature?
I think it's important to do your work to begin with. So step one, do the research, right? Do the diligence, be able to present. And number two, once you've done the work, package it. So one of the critical parts with any entrepreneur ultimately you're a storyteller. I can't remember where I first heard that from, but there's another entrepreneur describing it as you need to be a storyteller. And some of the best entrepreneurs are the best storytellers. So you pitch it with why is there an opportunity? Why should they invest? What's the benefit for them? Whether they are international investors or also local investors, right? We do have pockets of capital in our own markets which are looking for an interesting home. So I would say that yes, there are fewer pockets of capital. There's not as much of a volume for it, but the money is there. And the other thing is not just thinking about the geography, but if you start looking down basically the key industry, right? So my industry is energy, it's renewables. There's a lot of money for renewables. And over the last 10 years that I've been in the space, that money has only multiplied several fold. So rather than going into the meeting and saying, look, I want to pitch to you the specific Caribbean opportunity. No, this is an energy opportunity and something that you may not have looked at before.
No, I hear you on that, but one would have to recognize that the environment has changed, or well, it is changing. I'm not sure how far it has changed so far. We hear a lot of rhetoric, but we're not sure how far it has gone. And my query is this: has that dynamic changed? Because, for example, the United States, the current president has taken a decided contrary view in treating with renewable energy and renewable energy solutions. So has that really, from your perspective, has that fundamentally changed the dynamic in the market?
From my perspective, no, because I think, especially for the Caribbean, it's not a subsidized investment. The nature of the economics just makes sense. I mean, solar makes sense for companies. But yes, in general, the overall global market, I mean, you'll find that a number of the oil and gas companies were increasingly going into renewables, veering away from their traditional mainstay. And even companies with their rhetoric, as you call it, in terms of, are we going more green? Are we focused on the environment? But I mean, not to comment on the US politics, but the reality is that even back in the first Trump administration, they had a significant growth in renewables. So there's what's being said versus what's being done. And I think ultimately the industry is a lot more advanced and developed than it used to be. And if anything, not necessarily steering away from it, perhaps they're trying to find ways to invest, right? Which is not in a traditional way. So when it comes to, for instance, one of the main changes that we would have benefited from is the fact that the Chinese market, the Chinese suppliers are looking increasingly for another home. They've been doing that for decades. This is not a step change just because of the change of US administration. In terms of our discussions with them, they are trading a lot with the global south. So and the solar industry specifically is a very much China-centric industry. I mean, they're the largest module manufacturers, largest inverter manufacturers, and it is the largest market for solar. So rather than viewing it as an issue, to be quite frank, it's been an opportunity for us because now the suppliers are saying, look, we are still happy to supply to our traditional markets, but all these other global south markets are very interesting.
Mm-hmm. No, I get you on that completely. But I notice you said, for example, in the Caribbean, it would be an obvious choice. But one of the things that I have always queried is, one, yes, you have solar solutions, but the distribution network, the tying to the main grid, and all the attendant challenges that come with that, are we really ready for that type of throughput that would truly be transformative for the region?
So I think a couple of things. So you're absolutely right. Regulation is normally number one, but beyond regulation, there's the state of the infrastructure for distribution. And what's happened, whether the utilities have intended it or not, some utilities are not pro solar, right? Let's be very frank. I mean, you're from the Caribbean, so that's a statement of fact. And for a variety of reasons, I won't judge them on that decision because everyone to some extent takes care of their self-interest. So it'd be very hypocritical for me to be negative on someone who's just looking after their own self-interest. I think that's fair. But what's happened is because solar has come down so much in cost, rather than trying to find a centralized solution, solar has become an effective decentralized solution. So what you're finding is it's less a concern about what I'm doing to the grid or how I'm going to connect to the grid versus I'm just going to self-generate. And that is a trend that we're increasingly seeing across the region. So I remember And it doesn't mean that utility is not playing in that space, but I do think that's a little bit different dynamic. So in Barbados, for instance, they've had an excess, let's be very frank, an excess of decentralized system coming onto their network. And
Right.
part of the challenges there is not necessarily the self-generation being done by the respective industries or residences. It's more how the regulation is set up in terms of payment. So they have this ability, there's a feed-in tariff where they can feed into the grid at a price which quite frankly is very, very high. So what you have now is this excess of supply. The utility operator needs to be paying for this additional supply, and and the grid is not geared up to be able to accept it or to distribute it effectively, and that is an issue which they are now trying to resolve with this energy storage tender they've launched. But I guess just to go back to your earlier your question in terms of the infrastructure being perhaps a challenge, yes, it is. I think that is a statement of fact. But there are ways in which we're seeing across different jurisdictions that they're looking to relieve that bottleneck and that pain point.
Well, okay, I hear you. The other question would be for some, I mean, perhaps not Jamaica, but for some of the other countries within the region. Sometimes I'm hard pressed to identify the kind of solutions that would be really relevant for them, given the issue of size, just sheer size alone, and population numbers, etc. Well, how do you navigate that? I mean, what are the kinds of, because I mean, yes, I would agree with you. A lot of the areas are ripe for investment. No question about that. Right? But then you still have those, frankly, reality checks.
I mean, to be very frank, again, we struggle also with scale, right? We have a certain mandate in terms of the level of investment we need to push through, and also the resources. And to some extent, there's a fixed cost for us, whether it's a large project or a small project. This more or less the same amount of work needs to be done within our model. So we've been changing our business model, trying to adapt to find ways to tackle some of these smaller projects because they do exist and they are interesting. But again, as it comes to at the market level, it is a challenge. And I wish I could say, Joseph, I have this miracle response for how you deal with it. I mean, one of the things we've tried to do on the debt side is we did a capital raise on a portfolio basis. So we're looking at it, we're aggregating the smaller projects. And so rather than saying, look, we have this one little small project we want capital for, we said, no, this is going to be part of an overall portfolio. You need to be a bit patient with how they come through the system and how we aggregate them, but we're putting it in bulk. So it's effectively, kind
spread
of
the risk.
Yes,
You spread the risk.
you spread the risk. So that is one strategy. I'm certain there are many others, but that's one way that we are trying to tackle that.
But then, all right, comment, if you will, on the regulatory frame within which you have to operate.
Depends on the country. As we look at a range of them, each country is different. So we look at Jamaica, Cayman, Bahamas, Barbados. Every single one has its own nuances. Some are more restrictive than others. The utility in some countries are owned by the government or part owned by the government, majority control. That also has its own special challenges. So regulation, it can completely kill what we want to do with a stroke of a pen if it is not set in a certain way. Regulation, with that said, I do find that politically a number of countries are open to it. They're voicing that they want to add renewables. They view it as a way, especially now with the pricing of where solar is, a way to help to bring down cost for their end consumer, which quite frankly should be the end goal, right? Is to make the countries more competitive, both from on an overall economic basis, and you do need to bring down the cost of energy because it flows into everything.
Yeah, no, absolutely. And but what hasn't helped, and this is a part of it that I'm particularly curious about. You have all these, I call them routine, but now I call it routine. I'm no longer, I'm past the stage of being shocked or anything. Routine geopolitical issues that come to bear on this energy markets. The prices are volatile, they're up, down, they're all over the place. But at the same time, as you're looking at that, you're looking at a scenario whereby rates, oil prices are going up sometimes, like now we're going up somewhat.
Yeah.
What is a sweet spot where the prices are, how should I put it, low enough in the carbon market for it to remain, for the solar or the renewable energy solutions to remain
viable options versus a converse? Because with the market being all over the place,
Yeah.
I'm curious as to what is it? You have a crystal ball you're looking at.
Honestly, that's a very hard question. I've never been I believe in renewables. I'm obviously a solar developer, but
Right.
I've never been an advocate of a single solution for any of our islands. I think you
Okay.
have to diversify and have a mix of what you're doing for your energy supplies. So having a mix of some degree of fossil fuel exposure, some degree of renewable exposure, I think it makes sense to have a combination that works for you. And so that inherently gives you a bit of that hedge and balance as the prices change. For me, I like certainty. As business people, we want to know what's happening and have some view of where things can be. Renewables, especially, is capital intensive, but it's a capital investment. Once you've made the investment and you maintain the system, you more or less know what your costs are going to be over time, which is an advantage in my view of like solar installation. However, with fossil fuels, that's completely macro. Zero control, unless you're a member of OPEC and you're Saudi
Correct.
Arabia in particular, not even a member. You have to be the biggest member in terms of toggling the prices. And the US, if you
Yeah.
want to be dealing with gas, the reality you're going to be subject to volatility. And I think that's why I think it's important to have balance.
No, you have to have balance, but at the same time, and then I suppose we come full circle because then again, you're looking at diversification of sources, and let me put it that way, the solutions. But at the same time, you have the issue, the distributive challenges, because the amount, our frankly, right across this region, the distribution network is so outdated, let me put it that way, that the line losses and other challenges that obtain are immense. So even if your base cost comes down to something sensible, I suppose, within the marketplace, the truth of it is that given those losses, etc., those things have an additive.
And that is why decentralization is increasingly picking up because you're not subject to those losses. So I mean, taking Jamaica, for example, Jamaica suffers from significant technical and non-technical losses. So, which is a statement of fact. I mean, non-technical being, well, if you want to call it, you can call it either theft on one side or social justice on the other side. At least it made you laugh, Joseph. It's true, right? You can either view it as, look, they're stealing, or look, other people are stealing in other ways. It should be something that's a public good. But someone has to pay for it, right? It has to come from somewhere. And that drives up the cost. That does drive up the cost. So, yeah.
No, you see, for me, safety is safety. I can't pass that. And I mean, the other day, to see the amount of money that the government, for example, of Jamaica, has been earmarking to just deal with that challenge alone, we're ridiculous. I mean, any country, and I don't think, honestly, in fact, I had an earlier conversation with Devon Gardner on this thing, and Devon indicated that, I said, there is no other country that is comparable to Jamaica in terms of the electricity theft. So, at least within the region.
I didn't know that. And within the region.
Yeah, within the region. So, with that is a real issue. But, Angela, as because we just have to look at the marketplace. And I'm continually concerned about the development of our markets within the region, our capital markets within the region, and whether or not they would be at a stage of highly liquid in some cases, but are they at the stage where they can accommodate entrepreneurs such as yourself at scale?
I think they are. I think if you would ask me this question, Joseph, 10 years ago, I'd say no. Because when we were, I guess anecdotally, when we were starting to raise money for Paradise Park, just on the equity side, we were getting questions from bankers who will remain nameless, but they know they are.
Yeah, that's
questions
right.
such as, does solar really work? How does it work? Is it, no, I mean, and that was 10 years, 10 years ago. And the questions were so fundamental around just the technology and also the structure. So the typical way of doing for utility scale is project finance, which means that you are not providing collateral. The only collateral you're really providing for the underlying financing is the plant and the contract. kind of in a more simplistic way. Those are two core things. So you're the contract with JPS in this case, and the actual solar asset. And there would be typical, bankers at the time saying, well, no, we're going to need balance sheet from a corporate. We're going to need collateral. We're going to need, kind of a personal guarantee. All of these, which is effectively a 19, and this is not meant to be derogatory, it's the same as that, but like a 19 style of corporate banking.
Yeah.
So that's partly why when we're raising money for the project, the vast majority of the funds came from overseas because they were more advanced. They were willing to take our own risk. Think about that. It was easier to raise money from foreigners to take local risk than it was to raise from local banks at the time. There was one, to be fair, there was one exception, which I will call out because that's a positive thing. So the CIBC, they were a bit more, they're a bit more advanced in terms of how they were thinking about it. But there were bankers who were basically saying they wanted to charge me. Basically they said, look, we are going to take a fee on what we invest, but we're also going to go to other people to raise money, and we need to charge a fee on the other people's money, etc., rather than being willing to take the risk on their own balance sheet because they weren't comfortable with it.
So they're basically looking at you and saying they're going to syndicate the financing.
Yes.
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 Wow.
When they had the money on their own balance sheets.
That's amazing.
Yeah. So.
All right. Let
But
me
that
ask you this.
10 years ago. That was
No,
where it was
fine.
10 years ago.
Honestly, given that I did a commentary on asking the very simple question, are we really serious about doing business in the Caribbean a couple of weeks ago? Believe you me, it has not changed a whole lot. There may be some room for growth, yes, but I don't think it has changed that fundamentally. But on the other
hand,
No, but I'm just thinking on the other side of it now, the straight capital market, the stock market, etc. From where you sit, at one point, Jamaica, and to a lesser extent, Trinidad, they had very fast growing and well-performing, well-structured stock markets, etc. Again, For example, in the case of Jamaica, no foreign exchange restrictions, so therefore the market is active and therefore and the stocks are liquid. From where you are, is our stock market at a level, or at a stage rather, where you would consider some kind of listing of any of your enterprises on it?
so you're talking about the Jamaican stock market?
Jamaican one, yes. Well, to be honest, Jamaica and Trinidad have the most developed.
So I think the answer would be yes, but in terms of being access to investments. So I think the Jamaican market has, especially when they had the junior stock exchange and they were doing quite a few tax breaks to encourage people to list. I think that those markets have done quite well for the country and added a bit of transparency and growth for smaller businesses. For me personally, in the stage where we are with the business, it's not a question of whether listing locally, it's a question of listing period. Because with listing, there's a different level of transparency, reporting that you have to do, and we may not want that in a small market where the competition is there, and it's not, we may not want to disclose the level that we would need to be compliant with regulation. So it's less a question of whether I think the markets are functional or create an opportunity, because they do, and I think that's clear. You can see a number of, Wigton is listed, right? The government privatized their renewables. MPC, which was one of the investors in Paradise Park, they're also listed. They're listed, I think, in Trinidad. I think they have a dual listing between Trinidad and Jamaica. Examples of listings. My reason for not doing it is a bit different to saying that is not a good market to list. But liquidity is a challenge, but it's the nature of it's a small market, right? It is a small market.
Yes. Put it this way, yes and no. Yes, it is a small market. Yes, sometimes liquidity can be an issue. But what I find is, and this is my perception, guide me if you think I'm off base, but it seems that it's a mindset issue rather than dealing with it. When it comes on some things, we are ultra conservative in this region, and we take it to an extreme where to mask our conservative or ultra conservative nature, what we do is that we mire you in paperwork and the
Yes.
excess bureaucracy, which ultimately it does not inure to the benefit of the region. It just does not.
I cannot disagree with you on that one. I think you're absolutely right. I mean, for instance, I've heard of the friend who was getting a mortgage and the mortgage provider requested life insurance. So I thought on the person, and I was asking around, and it's actually fairly common in the Caribbean market for the bank to request life insurance to cover the loan. So my question was, but surely the loan is covered by the house. That they would, if you died and your family were not able to meet the obligations under the
Then you
the
have
mortgage
call.
business, you have collateral, you sell the house. If there's excess equity, you give it to the family and you claim your first lien on the house. So the idea that, man, so I was thinking, wow, this is a really lazy banker. So you're gonna basically, the guy dies or the lady dies, and rather than dealing with trying to sell the house, you're just gonna call on the proceeds of their life insurance.
And what it does is that it increases the effective transactions cost, because each of these things, they have an additive effect. It's, to be honest with you, it is absolutely amazing sometimes, and all they can do is continue to advocate and hope that sense prevails.
But effectively, they're doubling up on their security, which is unfair in my view. I mean, the bankers on the listening to the podcast may have a different opinion, but I think it's unfair to the client because you're claiming dual security, double the value of what you're actually lending.
Yeah, no, indeed, and it is not. I've seen ratios of 180, 200, 250% of the value of it. So, I mean, what you're saying is not that the data is not there, the literature is not there for people to reference. But it just strikes me that where we are at now, and we have to wrap up this in a few minutes, Angela. I'm just curious where we are now. If you had a crystal ball and from where you sit, you have invested in the region, you have also have access to resources globally, right? And a global market is your play field.
Yes.
What is it what are the probably, 2 or 3 things that the Caribbean needs to do to really put itself on a footing that it can truly attract investments at scale?
I think so. We do have good rule of law. I have to say that is one good base, but I think we need to maintain it. But from a deregulation was the only reason why the first project I did even exists. Period.
Okay.
So up until that point, independent developers could not develop renewable energy projects unless you partnered with the government. Period. And the minute they unlocked that, it was our project, WRB's project, BMR's project, all the market just started to flourish. You remove the noose from the market, it starts to flourish. Let the market work. And then the other thing I would say would be, at least on the financing side, we've talked a lot about the requirements, just going back to even the mortgage point. I think we have to be comfortable that if you're going to make a return, there's risk. And we're not saying go wild with the risk, but be fair with the risk. And that I don't think is fully reflected currently in the market. I haven't given you 3 things, Joseph, but maybe the 2 things.
No, that's fine. That's fine, because you see, why I raise the question in it is that, frankly speaking, like a business, if you don't grow, you'll stagnate and die.
Yes.
And frankly, what I find is that, and I keep using this phrase on this program, which it bothers me to have to even say it, but we are so mired in administrative inertia that we're killing.
No, we're killing it. So the third one is actually so again, I won't even call the country, you can probably guess, but it's in the Caribbean. So we were permitting for projects, and the parish council, municipal corporation, whatever you want to call it. I checked with my development manager, say, hey, it's been a few months now. What's the status of the application? Haven't heard from them. So he went to check, and the person said, oh, we don't have any record of your application. He whipped out the payment receipts. We don't pay cash to anyone, right? So everything is bank transfer, wire transfer. There's a paper trail. And they went, oh, okay. And then a few hours later, we still can't find it. So I needed to call a government trade and investment body to have someone call the senior person at that parish council to say, where is it? And within a couple hours, it
It
miraculously.
was found. Yeah. Wonderful.
But that's not, it's a problem because we're fortunate where I can put in that phone call. But what happens to all the other people who cannot access that point, who do not have someone to
Yeah.
call? It's not good. So that's the third thing. There you get your 3 points. That's the
No,
third thing.
I mean, no, indeed, but it's just really sad because sometimes you have to wonder: is it truly incompetence, or are there other motives at play? Because
Incentive mechanism needs to be put in place to encourage prompt, accurate processing.
well, Angela, I mean, I have to leave you now, but incentive mechanisms, is that really it? Because truthfully, listen, in terms of permitting, there are actual electronic solutions to this thing. One of them, which I'm familiar with, known as the Amanda system, right? What it is, a platform, submitting, for example, building plans, and you submit how many thing electronically. It is routinely and automatically shipped off to the various agencies. People have the time to opine on it, blah, 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 blah. Within probably 30, 45 days, you should be able to get your decision one way or the other on your project, rather than trying to do it sequentially, where send it to one, and then when they are finished, they send it to our next one, which can run you into months, if not years. So the point I'm making is it really that they need incentives to deal with it, or we just need to enforce these kinds of solutions? Because honestly, they're hindering development.
I think that's fair. I mean, I didn't think of it that way, but I think you're right. I think having proper systems, because again, I did a talk at a conference in the Netherlands, and it was about development and how you develop in the region. And there was a photograph that one of my guys took of a permitting office. There was a stack of paper that high. And you can imagine all these Europeans looking at it going, paper? All of that paper!
Yeah.
And it was totally disorganized. So, no, technology, that's an excellent point. I think that would be very good to help.
Well, Angela, the struggle continues. All I can say is
First one.
congratulations. Congratulations on what you have done so far. Congratulations, not just in terms of transitioning, and I call it applied business that you are doing, because you're moving from the straight, I would call it, the academic base is strong, yes, and the advisory background is equally strong. But at the same time, you have put it into the real world, and you are raising your money. You are doing well from all accounts. I mean, I'm sure that some nights you probably don't sleep as well as you should, but ultimately you do. The struggle is real, so ultimately you continue. So Angela Rainford, founder of Soleco Energies,
Yes.
and the other one that I cannot pronounce,
Camnear, Rainmaker, but that's fine.
Rainmaker. I do not know. You are something else. You turn it around. How long did it take you to learn to pronounce that thing?
A long time. I still get it wrong sometimes.
Because Rainmaker, to turn it the next way, boy, that's amazing. Angela, thank you so much for your time.
for
And we
having
do
me.
hope that we'll be able to call on you from time to time to give us further insights into what's going on in our markets.
Happy to help. Happy to support.
All right. So thank you
Thank
so much.
Thank you. Bye.
All right.
In a world of constant change, insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Welcome to Market Watch, our weekly snapshot of Caribbean business, finance, and economic news. I'm Joseph Cox. Antigua and Barbuda is moving to restructure its high-cost domestic debt with a $250 to $300 million bond issue aimed at reducing the debt service ratio from 30% to 20% of revenue. Talks are ongoing with Oppenheimer and possibly CAF with a 90-day window to close the deal. The government is also seeking relief from Brazil and Venezuela, whose combined claims exceed $544 million US. Additionally, Antigua has joined the OECD, G20, BEPS, multilateral instrument, becoming the 105th signatory to the Global Anti-Tax Avoidance Treaty Framework. In the Bahamas, the Q1 trade deficit widened to $1 billion US despite a 101% increase in exports. Imports rose 16% to $1.2 billion US, driven by machinery and food. Also, the government projects a $75.5 million budget surplus for fiscal year 25-26, its first in years, which will go entirely towards reducing the national debt of $11.7 billion US. Barbados received its final $58 million US payout from the IMF under the Extended Fund Facility and Resilience and Sustainability Facility. The fund lauded strong economic growth, declining debt, and successful structural reforms. The government remains committed to reaching a 60% debt to GDP target by fiscal year 35-36. In the Cayman Islands, Public Financial Holdings' offer of $7.75 US per share to acquire the remainder of Cayman National has been deemed financially inadequate by KPMG. The board warns shareholders of undervaluation with a July 29 decision deadline looming. Turning to Jamaica, the IMF's 2025 Article 4 consultation praised the country's macroeconomic stability, highlighting record low 3.7% unemployment, inflation within the 4 to 6% target range, and a decline in debt trajectory, with the 60% debt to GDP target set to be achieved by fiscal year 2027-2028. The fund also urged continued reform in tax administration, AML-CFT, and climate resilience. Meanwhile, in trade, for the January to February 2025 period, Jamaica's imports rose 1.9% to $1.32 billion US, led by raw materials and consumer goods. However, exports fell 8.9%, driven by a sharp 41% decline in mineral fuel shipments. In the services sector, while Jamaica's BPO industry appears to have plateaued, logistics outsourcing is emerging as a new frontier. With Amazon now shipping directly to Jamaica, efforts are underway to expand warehousing and fulfillment through third-party logistics services. Now to Trinidad and Tobago, where central bank leadership has taken a dramatic turn. Central Bank Governor Dr. Alvin Hilaire has been dismissed following a reported dispute with the government over disclosing major foreign exchange users. Former Finance Minister Larry Howai has taken the helm, promising balanced reforms. The move echoes similar tensions seen in 2015 and underscores an ongoing sensitivity surrounding FX management in that country. Grenada has secured a new $90 million US partnership with the OPEC Fund to support health, energy, water, and food security projects in the country. Also in focus, JetBlue and CIBC Caribbean has launched a business credit card across 4 markets. The U.S. Embassy has tightened visa vetting, now requiring 5 years of social media disclosures. Wigton Energy has acquired majority control of Flash Motors, backing its EV growth strategy. First Global Bank Jamaica will close 8 agency locations by July 31st, pivoting to digital services. Belize has published a list of major tax defaulters as part of stricter enforcement efforts. A new regional regulator for OECS citizenship by investment programs is set to launch within a month. St. Lucia has extended its tax amnesty to May 2026, with the penalties and interest waived. Finally, Ghana has commissioned the region's first World Trade Center in Georgetown, aimed at driving trade, investment, and SME competitiveness across the Caribbean. On the currency front, the Jamaican dollar trades at $160.82 to the US dollar, Ghana's dollar at $218, Trinidad's dollar at $6.70 US dollar. The Eastern Caribbean dollar holds at $2.71 to the US dollar. Turning now to the markets, the Jamaica Stock Exchange Index gained 0.43%, led by Sagicor's Real Estate Fund and JPSCO 7%, both up over 10%. However, Berger Paints Jamaica and Lasco Manufacturing fell sharply, down 13% and 7.7%, respectively. Now that's it for your Market Watch for this week. Global Pulse comes up next. This is CBR. Welcome to Global Pulse, your roundup of global economic trends shaping markets and influencing the Caribbean's outlook. I'm Joseph Cox. Let's take the pulse of the global economy. We begin in China, where trade divergence is growing. In May, exports of high-tech goods to the EU surged. Battery shipments jumped 52%, with Estonia and Bulgaria up over 1,000%. Meanwhile, exports to the US plunged. Smartphones down 76%, laptops 52%, and batteries 23%. Low-value parcel shipments to Europe also rose by 72%, led by AliExpress, Shein, and Temu, prompting EU regulators to consider a new €2 parcel fee amid fears of trade distortion. In the Middle East, rising tensions are sending tanker rates soaring. The cost of transporting oil from the Persian Gulf to China hit $76,000 per day, the highest since March 2023. Ship owners are demanding risk premiums to navigate the Strait of Hormuz, driving freight futures sharply higher and adding pressure to global oil supply chains. In the U.S., the economy shows mixed signals. Manufacturing held steady in June, but input prices spiked, signaling inflation's return. Quarter 1 GDP was revised down to negative 0.5%, and core inflation hit 3.5%. Retail sales fell 0.9%, reflecting caution, especially in autos and dining. Fed Chair Jerome Powell told Congress this week that rates will remain steady at 4.25% to 4.5%, with inflation and trade tensions driving uncertainty. Markets now expect just one rate cut in 2025. In Canada, inflation is cooling. The May CPI held at 1.7%, with major drops in fuel and housing costs, especially in Ontario. Despite rising car prices, the Bank of Canada is likely to keep rates at 2.75% for July, with analysts expecting just one cut for the rest of the year. In Europe, policymakers are walking a tightrope. To support industrial competitiveness, the EU is now allowing temporary electricity price relief for heavy industries under its Clean Industrial Deal. In the UK, the government has unveiled a bold 10-year industrial strategy with over £30 billion annually earmarked for clean energy and a new £2.8 billion fund for advancing manufacturing. Bank of England Governor Andrew Bailey cautioned that while inflation is easing, labor market slack is emerging and interest rates will remain data dependent. Turning to Asia, China's premier has announced a major subsidy package for household purchases and pledged global cooperation on EV and AI development, an implicit contrast to U.S. tech restrictions. In Pakistan, port competitiveness is the focus. The government has cut port fees by 50% at Port Qasim and met its $110 million fisheries export target. And in Ireland, the threat of the U.S. pharmaceutical tariffs has raised alarms that up to 75,000 jobs are at risk, given Ireland's deep ties to U.S. multinationals like Apple and Pfizer. Finally, the World Trade Organization reports a modest uptick in global trade, with its barometer rising to 103.5. But weakening export orders point to a potential softening in the second half of 2025. Now let's take a look at how the major global markets and commodities performed at the week's end. In commodities, oil prices saw mild gains. West Texas Intermediate crude edged up to $65.52. Brent crude held steady at $67.77, and the OPEC basket rose to $68.13. The standout mover was natural gas, surging 6% to $3.73, driven by strong summer demand forecasts. In equities, Wall Street posted solid gains across the board. The Dow Jones Industrial Average rose 432 points, closing at 43,819 points, up 1%. The S&P 500 at 32 points and the Nasdaq climbed 105 points, both up 0.5%. In Europe, Germany's DAX rallied 1.62%. France's CAC 40 led the region with a 1.78% gain, and the UK's FTSE 100 rose 0.72%. In Asia, Japan's Nikkei 225 jumped 1.43%, while Hong Kong's Hang Seng bucked the trend, slipping 0.17%. Now that's your Global Pulse update for this week. I'm Joseph Cox. This is CBR. Well, that's a wrap for this week, folks. We thank you very much for your attention as we had navigated the 7th issue of Caribbean Business Review. Also, a very special thanks to Angela Rainford, the CEO of Statistical Energy, for her insights into our Caribbean business climate. We also want to remind you that there's a new issue of or new edition rather, of the Caribbean Financial Dispatch, which is available to you. Again, if you wish to subscribe, you can send us a quick email at caribbeanbusinessreview@gmail.com, or you can now go to josephcox.org, where you can see a dedicated page to CBR, and you can also avail yourself of the offerings there, as well as we also entreat you to listen to this program. You can follow this program. We can, if you want to listen to it again, we can take you to and from work via our Spotify channel. We're also on LinkedIn. And we have also, and I will tell you something, ladies and gentlemen, I have profound new respect for TikTok. I had no idea there's a gem that I have been overlooking, probably to my own detriment from time to time, but not anymore. So we entreat you to follow us on our social media channels, Instagram, X, and we'll continue to build out this program. So frankly speaking, all that's left for me to say is thank you very much for your attention, and we do hope that you'll be able to like, share, and subscribe to this program as we invite you to join us again next week, same time, same place. Until then, I am Joseph Cox, and this has been CBR.